Welcome back. You're still tuned into ET Now, and let's put the spotlight on Pace Digitek. The stock was in focus last week on the back of a 700-odd crore order that the company won. And to understand the execution timeline and what the order book position now looks like, we are now joined by the chairman and managing director of the company, Venu Gopal Madisetti. Sir, thank you so much for taking your time out and joining us here on ET Now. And first up, let's talk about the order win that you won last week. Current order has an EPC scope timeline of about 18 months. What percentage of revenue do you expect to realize in FY27? And what percentage of this order is inclined towards the O&M segment, if you can quantify that for us?
Probably it will be able to realize about 60% in this financial year. That's FY27. And then the balance would go to the next financial year.
And Mr. Madisetti, what percentage of this order is inclined towards the O&M segment, if you can clarify that for us?
I think the operations and maintenance is a smaller portion in terms of about, I think some 10% of it. There is about 770 crores is the operations and maintenance for 12 years. And then the balance is for the execution. That means up to the commissioning of the project.
Understood. So in FY26, company reported energy order inflows to the tune of 5,800 crores. And this was led by increasing traction in BESS and renewable linked opportunities. How does the demand traction for FY27 look like for both these sub-segments of your business?
The demand for this energy storage is increasing rapidly, I would say, because now, as we all know, that the renewable energy, which is getting installed or connected to the grid in such a way that by 2030, we are planning for about 500 gigawatt of renewable energy getting interconnected or getting connected to the grid. So what it means is that it is 50% of the energy that is required for the country. Now, the intermittent nature of this renewable energy, whether it is solar or wind, basically they are not available for the constant, throughout the day as well as throughout the year. So what needs to be done is that to really harness the renewable energy to the 50% of the country's requirement, we need to have the energy storage, and that is where we are into now. We are, providing the energy storage to the renewable energy, where the excess renewable energy, as and when it is generated, is stored into the batteries, and then you can give it back to the grid, in the non-peak hours, like in peak hours of evening, where the renewable energy is not available. So this is the background of the where the BESS is being applied for. So what happens is that as the renewable energy is going further and further, increasing in the country, the demand for the battery is certainly increasing. It has become kind of mandatory now.
Right, so demand for batteries is increasing, that's the word coming in. But let's also talk about your capacity expansion plans, Mr. Madisetti. Company is doubling its capacity from 5 gigawatt to 10 gigawatt now. What will the capital outlay be for this particular capacity expansion, and how do you aim to fund this capex? Moreover, what level of capacity utilization are you penciling in, say by FY28 over the next 2 to 3 years?
Now we are at 5 gigawatt hour capacity of BESS manufacturing, and we have already expanded our construction to the 10 gigawatt hour, which means that the entire construction is done and the equipments also have been ordered, which would be commissioned by September of this year. That is 26th of September. So from October, we will have an installed capacity of 10 gigawatt hour, which will really take care of the demand that we have. Secondly, on the capex, it is internal accruals. We have taken care of this construction and the equipment that will be commissioned by September. And lastly, on the FY28 utilization will be complete 10 gigawatt hour. We do see that there is a demand, and we also have some order books already, and there's a big pipeline also created already. So in this financial year also, we'll be booking a lot of orders. So all in all, what we see is that for the FY28, we would like to see a 10 gigawatt complete utilization of the the facility.
And the management had earlier said in the con call that the company is targeting about 3,200 crores of revenue. Mr. Madisetti, what are the key drivers that will ensure that you're able to achieve this target, and by when do you aim to achieve this revenue target?
Yeah, I think this year we are seeing the the previous financial year, like FY26, if we see our two verticals, that energy and telecom verticals, the telecom was the major one, whereas the energy, since we started last financial year only, so around 35% of the revenues are coming from the energy sector. Now this financial year, that is FY27, it is going to be the other way, like, the energy would be doing about 65% of the total revenues, and 35% would be coming from the telecom. So the majorly the energy sector would be driving the growth. What we have, the guidance what we are given, it will be driven by the energy sector, which is majorly from the battery energy storage systems.
And Mr. Madisetti, due to anticipated shift in revenue mix towards energy segment, what will your margin outlook be for the next 2 to 3 years? If you can share your guidance when it comes to margins.
See, the margins more or less should be same since we are in our mix of business, like in terms of manufacturing projects, would continue to be the same. However, there's a lot of import dependency on the energy business, where we are importing the energy in the battery cells. Now, because of this ongoing conflict and the dollar impact, there would be some impact on our bottom line. That's the PAT, probably about 1% or 1 or 2%. We would see there could be a decline. But that depends upon how long this issue would continue further. I think that depends on that, because earlier the dollar was about 92 rupees and now it's reached 95. So we are seeing that could be the little bit of risk for us in terms of the bottom line. But otherwise, as a product mix and the business mix in terms of products and service projects and services, we do see a lot of more or less same, but there could be little impact this year, particularly because of the external factor that attributable to this West Asia issues.
Right, Mr. Madisetti, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts not only on the 700 odd crore order, but also on what the outlook is for the company going forward when it comes to capacity expansion. The stock is holding on to gains of 0.7% in an otherwise weak market. But that's all the time we have on this edition of the show. Thanks so much for tuning in. Market Fatafat will take you through the next half hour of trade.